Hi, I'm Grant Blaisdell, and welcome to the Mr. Crypto Show. This week, banks meltdown and crypto rises. Big week since we last spoke. Last time I was here speaking to you, the SVB situation was just popping off, right? So bank is going to be a big topic today. Why? Because it affects heavily the crypto market and the blockchain market overall. So Silicon Valley Bank, this past day, its parent company, so the whole holding company, filed for Chapter 11 bankruptcy, right? The US government has come in to guarantee depositors. There's this thing in the United States called the FDIC. When you walk into an American bank, you'll see a sticker on it, on the bank, that will say, FDIC insured up to $250,000, meaning if you hold funds in a U.S. bank, it's insured by the federal government up to $250,000. What's happening here, though, is most of those depositors in SVB Bank, what it got famous off of, is offering services to venture capital and startups, especially in the Silicon Valley area. Right, but this is spread across major metropolitan areas, business centers around the world. The thing here, once again, is they're going to guarantee the depositors money beyond $250,000. So kind of the federal government is coming in to bail out, so to say, venture capital and a lot of startups. There's even a funny story about a guy who he was just loaning money out to startups as a general business. When this happened, since a load of these startups couldn't access their funds in SVB, he made a great deal of business giving these entities loans who are then going to, or are getting their funds back that they're holding in SVB at an interest, right? So he's saving a lot of companies, making a lot of money doing it. So, really why this happened, and same thing across a bunch of banks, some of we'll get into, is a bunch of money was in the system 2021, 2022. SVB Bank had record deposits, I think around $200 billion, and they put most of that into government bonds, which is usually one of the safer kind of holdings investments you can make, as long as the interest rates nationally don't go above the interest rate which you took the bond out. And the government has been printing and raising those interest rates to a level where if a bank gets called, people want to take out their cash, they'll need to sell a bunch of those bonds, but they're selling them at such a lower rate that they can't cover everything and they collapse. And that's pretty much what happened with SVB with Silicon Valley Bank. Signature Bank also, a couple days ago, the US regulators came in, took control of the bank, right? The bank was fallen. So the FDIC, who's now in control of this bank, wants to sell the whole business, right? And there's a rumor that the buyer will have to remove the crypto side of the business and the assets, but that doesn't seem the case, that they don't have to remove the crypto side of the business. Another one, First Republic Bank, also a bank that's kind of known for servicing high net worth individuals, startups, funds, those sort of things. That got an injection of $30 billion from Wall Street, right? So JP Morgan, Goldman Sachs, and some other banks agreed to inject $30 billion into First Republic to save First Republic Bank. Right, so a lot of this, once again, sits behind government bonds, which are usually quite secure. But once again, printing and interest rates got higher than that bond rate, cash run, right? And they don't have the money to do that. Overall, the Fed, the Federal Reserve in the United States, put $300 billion into banks just this past week, right? There's rumors around like a $2 trillion package coming out overall just to inject into the economy, right? And this, what's happening doesn't, only touch American banks. So Credit Suisse recently needed a $54 billion lifeline, and this was injected by the Swiss National Bank. And generally, if you've been in banking, you've heard of rumors around big banks like Deutsche Bank having issues for a while now. But Credit Suisse is the one that popped off along with the stuff that's happening in the United States. So they got that $54 billion from the Swiss National Bank. What does this mean? That means that there's about to be lots of cash in the system again, right? So what you might see around these startups, et cetera, and crypto is that money will start flowing into that, right? Money's flowing into banks from the government. Individuals are taking money out of the banks and they want to put them somewhere else. So that leads to the second big thing, which happened over the past couple days and this morning, which is the overall Bitcoin and market price surge. I think a big thing that has to do with it is what we were just talking about. Loads of money is about to be pumped into the market, mainly through the US Fed and government. And the market's reacting to that, right? So Bitcoin hit a high above $26,000 this Friday morning. But that wasn't just for Bitcoin, it was across the whole market. So the total market cap rose 4% just in the past day, going up to $1.17 trillion. But what's interesting is, one thing that also happened recently is kind of the decoupling from stablecoins. Stablecoins, USDC, and some others were having issues. And people are getting out of stablecoins, right? So $3 billion left USDC in 3 days. People had USDC transferred over to a different asset. But right after Silicon Valley Bank happened or started happening, users started moving funds from centralized exchanges, right? Some of this might also be, just an overall wave effect of the FTX, et cetera, into decentralized exchanges and back onto USDC. Right, so just on March 11th, $300 million moved from centralized exchanges into decentralized exchanges, right? So once again, what you're seeing is all this cash is going to be pumped into the system. Markets are reacting to that in various sort of ways, and this will be good for crypto and startups, but I think it will adjust to generally how the market is going, right? I think this is just a momentary reaction to the signals, the news that funds are going to get pumped into the system, and that those worries that people had before are not big worries. Because last week when the SVB thing started speaking, everybody in crypto had very doomsday-ish sort of attitudes. But what has these fluctuations, especially this big dip this past year in crypto, has happened? And how it's affecting, especially like NFT related companies and projects who are holding, for example, Ethereum, right? They had some NFT sales, some products, whatever it was, and they received funds in Ethereum, for example. Well, if they didn't cash those funds out, transfer them to a stable coin, et cetera, what happened to those funds? Well, they lost, if it was Ethereum, for example, they lost 60% in a year. So what has this done? This is putting, first off, a lot of companies lost a lot of money, and the effect of that is that it's a main reason why a lot of startups, companies, and even some exchanges, for example, have failed, right? They've been holding Ethereum. Ethereum dropped. They need liquidity, right? And what happens? Just like Silicon Valley Bank, you put your money into something, or you got money in something in this case, and you held it there, and then something happened in the market, the value of that fell, but you needed liquidity, so you need to sell off this stuff, and since the value fell so much, you can't sell off enough to match your liquidity needs, right? This is similar to me as to what happened, if you've been in this market long enough, what happened with the ICO, the initial coin offering boom, and then the burst, right? I have personal experience around this, but you had lots of companies who raised, let's say, $100 million. They held it in Ethereum, market popped, all of a sudden, now that's $30 million, Well, your needs as a company potentially didn't change to adjust to that drop, and that drop happens, and then there's a call, you need liquidity, and I might not have enough liquidity to cover what I need, and if I don't adjust fast enough, scale down or whatever it is to bear nothing, then the company doesn't survive. So at the end of the day, whether you're a big bank, Silicon Valley Bank I think was the 15th largest bank in the United States. Even if you're a bank of that size or you're a crypto startup, liquidity is important. And what made me start speaking about this is Playboy had a very successful NFT project last year. In this past year, they've lost $5 million in holdings, right? So there's a $5 million that just boop in liquidity and value that just disappeared out of their project. So at the end of the day, liquidity is king, most important for the businesses. Whether you're a big bank or you're a small startup, everyone knows that that's important for a small startup, but people don't think that in a moment, right, a major bank can have such a liquidity issue. But we're human, we don't learn off history or our mistakes. You know, there's certain similarities to what happened in 2008 with some of the stuff we're seeing now. Obviously hasn't yet reached those sort of levels. So to keep on with kind of the depressing money-losing sort of conversation, smart contracts and this DeFi and centralized as well, obviously, but smart contracts, you know, if you can find a way to manipulate them, you can walk away from some of these protocols and projects with a lot of money. So lending protocol on Ethereum, Euler Finance got hacked for $196 million, right? Why am I especially talking about this? Because this protocol had 10 audits over a 2-year span. Entities like ZK Labs, known entities, audited their smart contracts. We've seen this over the years happening all the time. There's some project that has, you know, $500 million, in this case $200 million, floating around in it that, boom, gets hacked, right? The hackers figure out some vulnerability in the smart contracts and they pull that money out, right? And then they try to, you know, cash that money out or spread it out so they can cash it out later at some sort of time. But in this case, you know, 10 audits in 2 years. But its most recent audit wasn't that recent from what I could tell. So this begs me this question, you know, with all this crazy stuff happening, you know, more regulation is coming in, right? The question is how painful, how much is it going to hurt innovation, right? And how much control is it going to put over the market from the government in a negative way, right? That's the worries around there. But when it comes to this, it sounds like there should be some controls. I don't know how banking systems get audited, how often that happens, et cetera, to see vulnerabilities. But in cases, you know, that are tied to smart contracts like this, you know, you can walk away with $196 million, you know, like that. You know, they hired investigators that are tracing this. You know, for those who don't know, unless we're really talking about Monero or something like that, crypto is the most traceable asset ever, right? So if you think, you know, hiding how funds move, et cetera, in crypto is like a benefit, you're generally wrong around that. So the question for me is okay, well, what regulation should come in on something like this, right? Should the government ask for an audit every quarter, right? How much do you know how much audit costs? Really good audits are really expensive, right? So if you're a startup or something like that, that might be a regulation that could potentially kill you. Or for example, if you hold above X amount, or X amount is moving through your system, above X amount, do you have to have that quarterly audit? And if you're under that, it's a yearly or whatever it may be, right? So how is the market going to react to this? Because this can't just keep on happening where, you know, these protocols, these lending sort of things, some of these DeFi projects just get, I mean, they pretty much disappear overnight, right? And then we started talking about FDIC insured funds up to $250,000. Is anything like that going to enter the crypto market, these exchanges, these protocols, anytime in the near future? Something that's also happened due to the boom and burst of some of these NFT projects or things like FTX is a lot of influencers are starting to get sued or come under SEC regulatory pressure. Most recently, BitBoy got named in a civil lawsuit related to FTX. I actually had a chance to, meet him, sit next to him, and talk to him for a while in Miami recently at an event. But this adds to others like Pompliano and Leary from Shark Tank that are being named in lawsuits related to the FTX fall for promoting it, right? Being paid to promote it in some sort of manner. With Leary, it's most famous because I believe he got paid a large amount to promote it, right? And even after the fall or the beginning of the fall, he was kind of defending SBF, et cetera. So that's probably the most high profile one. But let's remember, Kim Kardashian had to pay over a $1 million fine last year by the SEC for promoting an unlawful promotion, right? But I want to end on a more fun sort of thing. So ChatGPT 4 came out and a group programmed it to trade crypto with the goal, program it to earn as much in a short amount of time using $100, right? Starting with $100. So what ChatGPT 4 chose to do is put 50 of it into Bitcoin, 25 into Ethereum, 15 into Cosmos, and $10 into NFT and Web3 related projects. This started just this past week, and supposedly it's experienced a small gain so far. So, for people out there who, let's say, understand how to use ChatGPT in more advanced ways than, just putting in basic queries, maybe it will end up, and I guarantee you loads of products are gonna come out over the next couple years that are like using AI to automate your trading, right? Or something like that. But the thing is like, not everyone can be a winner. Like there's no winners without losers in markets generally, right? So the question is once, things like this become so broadly used, well, who's gonna be losing, right? Someone has to. But either way, interesting, for you at-home traders, interesting thing to look into. Like I said, $100 and it spread it out according to that sort of strategy, but it only had data up until I think last year or something like that. So it's not like it's live data being fed into it. Either way, an interesting story to kind of end on to see where, the financial markets are going and how this is mixing with other markets and technology. This combination of crypto and AI, people have been talking about it, for years, but we might start seeing some of these first real kind of iterations here coming soon. Next week, I'll be actually at an award show because one of my companies got nominated for an award for Blockchain Company of the Year, but we might have, let's say, quote unquote, the studio with us there. So I might come to you next week from a different location, but I can't confirm that. Either way, next time we talk, the world will be different. Lots of things are happening as we speak, so I'll update you as to obviously the banks, how this stuff is affecting the crypto market, and anything else that happens in the meantime. So once again, thanks for joining me on the Mr. Crypto Show. I am Grant Blaisdell, and I'll be seeing you soon.